and data-driven technology be used at the points of creation of these payments to validate how these payments are being set up.
Hello, and welcome back to the Bankers Masterclass series in association with Accuity, discussing what established players and new market participants can do to protect their future and reputation in payments. I'm Joy McKnight, Deputy Editor of The Banker, and I have in the studio with me Robert McKay, Executive Vice President at Accuity, a global payments and financial crime compliance company. In Chapter 1 of this three-part series, we looked at the innovation and competition, effectively taking the pulse of the payments industry. In Chapter 2, we look at how payments providers, both the incumbent financial institutions and new payment service providers, or PSPs, need accurate data to innovate and stay ahead of the competition. Bob, thanks so much for joining us today.
Hello, Joy. Thank you.
So we did talk a little bit about some of the pressures that were coming to bear on the payments industry, but where do you think that the real pressure is coming from for banks and PSPs to innovate?
Well, innovation strategies certainly can have long-lasting consequences. For PSPs, because they're solely focused in the payments area, they're driven to have a superior offering to the traditional players. So this means innovations around user experiences that are intuitive, fast, and effective. For PSPs that are trying to penetrate the corporate market, they're going to have a tough challenge there. So we're seeing early trends where some of the winners might be those PSPs that collaborate with financial institutions.
Okay, and are you seeing a lot more of this kind of collaboration, and what is really, forcing the financial institutions to do this?
Well, financial institutions themselves face great pressures themselves. First, this influx of new tech entrants into the payments space is driving pricing down and invariably will affect fee revenue and margins in payment operations. More so, increasing regulations for anti-money laundering, KYC, tax recovery, capital adequacy are all making great demands on how a bank's capital could be used against those projects. So financial institutions need to make critical decisions about how they apply investment funds to innovations. Some of the most effective uses of that innovation would be to first consider how the bank characterizes its payment operations in its business cases for these investments, not viewing solely payment operations in of itself, especially in shrinking kind of profitability, but contextualizing it against a greater customer experience, recognizing that banks probably make more money cross-selling these customers, things like credit cards and mortgages and investment products. So then when viewing the business at large, sometimes the more effective use of this capital would be through a partnership with PSPs.
So there's this big explosion of Fintechs, which are, working within the payment services space. What did they bring to the table?
Perhaps the greatest assets that PSPs have are their ability to be nimble and to bring true creativity to the whole payments technology. When we see the advent of new schemes and policies like PSD2, certainly there's going to be a great influx of lots of new tech players. And with the open APIs that are adopting that forced utility between the FI community and PSPs, the true winners in this space are the ones that are going to be able to respond quickly and to address true customer problems through technology.
Okay, but whether you're, an incumbent financial institution or a new entrant PSP, what should they really be focused on at this point in time?
Well, there are three major trends that we see both PSPs and financial institutions having to be wary of. First, as commerce has grown globally, and we see supply chains and distribution channels taking them into emerging markets, both payment providers have to understand how well placed they are about affecting payments into those areas, because it only takes a few failed payments for that erosion of customer trust, quite honestly. The second is a focus on the whole user experience. The more youthful payment originators are very tech savvy. They have an anticipation of 24/7 accessibility and a seamlessness to the way payments are routed. And finally, there's the trust. There's an expectation that the originators of payments today will have the speed and straight-through processing. It's just a given So the true winners in this space are going to be those organizations that can have the reach, make those user experiences seamless, and have the straight-through processing rates be effective.
Okay. And is there any sort of internal or organizational areas that, let's say, incumbents or PSPs should be really looking at this moment?
Absolutely. In the context of a shrinking profitability of payment operations, there really has been a focus on how to drive operational improvements. Some of the trends we're seeing certainly revolve around automation. How can those processes, whether at the front office, middle office, or back office, be streamlined, perhaps even using robotics, for example. A deep examination of some of the manual processes. Can data-driven technology be used at the points of creation of these payments to validate how these payments are being set up? And then finally, understanding that payments can be routed in many different ways. Can there be an optimization to the flows of these payments, tapping into some of these domestic clearing systems?
So that seems to be a lot of things for FIs to consider. Sort of, what are their strengths?
Well, FIs have to recognize that they hold great amount of experience in providing payments. On top of that, they have access to a lot of capital, whether it's to drive internal innovations or collaborative approaches. And finally, they have the customer trust. I can't underscore that customer trust highly enough. Despite how many new tech entrants come into the marketplace with creative solutions to the problem, it's hard to replicate the customer trust. And I think, especially when you think of corporate customers, they have an anticipation of their broader account needs being met by a financial institution. So this is where we see an opportunity for collaboration between the financial institutions and the PSPs to leverage that trust and still inspire innovation through a collaborative approach.
Well, thank you so much for your insights, Bob. In the final chapter of this 3-part masterclass series, in association with Accuity, we're exploring how to make payments safer within this new competitive, innovative, and regulatory environment.